Hello, everyone. I'm teacher Jonna of Accountancy, Business, and Management. Welcome to my class in Fundamentals in Accountancy, Business, and Management 2. And now we have a new lesson. It is how to prepare the bank reconciliation statement. Okay. Okay. As entrepreneurs or businessmen, they always have to put their money in the bank, okay? Because they maintain a portion of their cash in the vaults, maybe for their daily operations, which we call the petty cash fund or the working capital. But much of their cash is placed in the bank, okay? So because of that, they receive a bank balance or bank statement balance every month. But the problem here is the bank balance which we receive from the bank do not does not tally with our book balance which reflects our cash accounts. Okay? So, our problem in this case is we have to see to it that the balance in the bank and the balance in the book should be equal. Okay? Because you will notice, for example, in this case, when we receive the bank balance or the bank statement, it reflects a bank balance of how much? 17,458. While if you will examine your book balance, it shows a, a cash in bank of 20,643.30. So if what is the difference? It's not equal. So your bank balance is not equal to your book balance, which should not be the case. So our objective is to adjust the book balance and the bank balance so that they are equal. The adjusted book balance should equal to your adjusted bank balance. So in this case, the at the beginning of March 31, when we receive the on March 31, when we receive the bank statement, they do not tally, but at the end of the preparation of the bank statement, now it's tallied. So adjusted book balance is now equal to your adjusted bank balance. How did we do it? Let me show you today. Okay, so we we have here the bank reconciliation statement, the causes. Okay, why is it that the above figures or the previous slide that I have shown you, the bank balance does not tally with your book balance? Okay, the reason for that is because of the time logs. And number two, errors may be committed by the book or by the bank. And then we will identify what type of errors is that, what type of errors committed so we can adjust them. Now, what are the importance of bank reconciliation statement? Okay, bank reconciliation statement is a vital document of an enterprise, of a business. Okay, why? Number one, the bank reconciliation statement helps us to identify the errors. Maybe the bank may have committed an error or the book may have committed an error. What types of errors may it be? Well, it may be in the incorrect amount. Okay? It may be written uh, incorrectly. The amount should be 1,500, but the one issued or written was 1,300. Something like that. Errors in the figures. Or number two, control mechanism for cash. Okay, we have studied in our cash flow or even in our balance sheet that cash is the most liquid asset, and as such, it is most vulnerable to movements or to many things that many things may happen along the so many transactions that the company must maintain an internal control for cash, and one of which is keeping your cash in the bank. Once you keep your money in the bank, it would be easy to control the movement of the cash. Why? Because as part of internal control, you can easily uncover irregularities in the bank transactions or in the cash transactions, such as number one, maybe you can see there an unauthorized bank withdrawals. Okay, but when we do this, we have to see to it. It is advisable that the persons preparing the bank reconciliation statement is different from the person authorizing or approving the payment of vouchers or check vouchers, and from the person monitoring the bank reconciliation statement. Okay, that's part of internal control for cash. And number three, you can also, the one importance of that is the regular monitoring of cash flows of a business. Okay, so um, because of the cash flows that we prepare monthly or whatever period do you prepare it, you can easily trace or uh, bank tracing is very easy because there are documents to support your your movements of the cash. Okay, because as part of the internal control, when you make a deposit, there is an authority from the person, from a higher person. When you make vouchers for payments, there is an authority from the person in charge of that. So, monitoring of your cash flows will be regulated. Okay? Then we also have the three methods of preparing the bank reconciliation. We have the adjusted method, the book to bank, and the bank to book. Okay, adjusted method, the balances per bank and the balances per book are separately determined. Well, when we say book to bank method, the book balance is adjusted to agree with the bank balance. When we say bank to book, the bank balance is adjusted to agree with the book. Okay? So that's it. Now we also have the common reconciling items. We will be meeting these terms when you do your bank reconciliation statement. Number one, the deposit in transit. What do you mean by deposit in transit? Well, that is a deposit on the way to the bank, but it did not meet the right timing. For example, deposit in transits are amounts already received and recorded by the bank, by the company, but are not yet recorded by the bank. Why? Because an example for this is, for example, uh, I am about to deposit my money, or the company A will deposit its money, but there was traffic along the way on his way to the bank. Okay, there was traffic, so he reached the bank at exactly 4 o'clock, and he was able to deposit it at 4:30. It so happened that banks operate on a cut-off basis. They only accept deposits. Yes, they may accept your deposits, but deposits are recorded until 3 o'clock p.m. only. So that means your deposit in the bank was not yet recorded by the bank because of the time or the cut-off time. So that is what you call a deposit in transit. It has been recorded in the books, but not yet recorded in the bank because of time difference. He wasn't able to reach the bank at exactly 3 o'clock p.m. Okay? So number two, outstanding checks. When we say outstanding checks, these are checks that have been written and recorded in the company, in the company's cash account, but have not yet been cleared to the bank or not yet presented to the bank by the payee. Okay? So outstanding check. For example, ABC company will issue a check, okay, to Maria, and Maria received the check. The date of the check was that? The date of the check was uh what March. Yes, this is March. The date of the check was March 5, but Maria did not deposit the check until it was April 3. Okay? So that means the check was already recorded in the books but has not yet been presented to the bank until March 31, but it was only presented to the bank on what was the date I gave you? April 3. So that is beyond the cutoff date of March 31. So it has not been presented to the bank by the payee for payment until May 3. No, April 3. So the bank statement for March do not reflect this amount. Okay? It doesn't reflect the amount which Maria did not encash yet in the bank. Okay, next we have the bank errors. When we say bank errors, these are mistakes made by the bank. For example, it may include an incorrect amount. Maybe there was an incorrect recording an incorrect amount or entering an amount that does not belong to the company. Okay? Or omitting an amount from the company's bank statement. So that means that is an error of the bank which needs to be corrected. Okay, then we have the bank service charges. When we say bank service charges, well, this is a charge by the bank. What do you mean by charge? The company may charge fees for some services, like the banks for the processing of the checking account. Okay, for the processing of the checking account activity, example, for accepting deposits. Number two, for posting the checks. And number three, for mailing the bank statement. So that is a charge by the bank to the depositor. Okay. Next, we have the NSF check. An NSF check is a check that was not honored by the bank of the person or company writing the check because the amount did not have sufficient funds. Okay po. So that's it. As a result, the check is returned without being honored or paid. So that is a check with no fund, no sufficient fund. Okay, next we have check printing charges. Okay, check printing charges. This is the charge of the bank to the company when the company requests for the checkbook. Okay, or maybe the company would request for a special type of checkbook, because there are banks who make was this each company who they prepared different was this post no no checking account for each company, or a special type of checking account. So the cost of the printed checks, then that is for the check printing charges. Then we have the interest earned. This will appear on the bank statement when a bank gives a company an interest on its account balances. Isn't it, when you put money in your bank, it earns interest depending on the interest of the bank. So when you maintain an account to the bank will reflect the interest earned by your account. Okay? Then the notes receivable, these are the assets of the company. Okay? When a note becomes due, the company can request the bank to collect. So they can collect the notes receivable of the client, of the depositor, and then the bank receives the notes receivable, and that becomes a reconciling item of the bank, because it has been recorded already in the bank but not yet in the books. Okay? Then we have also the errors in the company's cash account. Okay. A while ago we discussed the bank errors. An error also may be committed by the company. So it may result some of the errors may be the incorrect amount, posting of an incorrect amount, or entering a transaction that does not belong to that account. Okay? or maybe you can omit a transaction that should be in the account. Okay. So this is also an error of the books, or the client. Okay. Next we have, okay, let me show you a problem exercise. The name of the company is Meco Trading. Meco received a bank statement from the bank, and the bank statement of Meco shows a balance per bank of 20,643.80. Okay, it shows a bank balance of 20,643.80 on March 31, 2019. But in your book records, your cash per book is how much? 17,458.30. So there is already a discrepancy. The book per bank and the book, no, no. The cash per bank and the cash per book do not tally. Okay, so what do we do now? Again, there is another information. Deposit in transit, deposits in transit. March 31 deposit, but was received by the bank on April 1, 2019, in the amount of 2,438.30. Okay, so there is a deposit in transit. Next, we have an outstanding checks. I think there are three outstanding checks, okay, with the following amount: 1,450, 2,789, 3,982. And there are also errors. Meco Trading issued a check number 300 for 1,360, and the bank correctly paid that amount. However, Meco Trading recorded the check as 1,633. So there was an error on the part of Meco. Okay, next we have a bank memoranda. What do you mean by bank memoranda? It may be a debit memo or a credit memo. A debit memo meaning debit charge, so it will be a deduction. Then a credit memo, that's a credit on the credit side, that means it will increase your account. So the debit memo says debit memo for no sufficient fund, NSF 4,500, and bank fee of 197.80. Then a debit memo for printing company checks, 100 pesos, and a credit memo for collection of notes receivable for 1,800 plus interest earned of 180 less bank collection fee of 50 pesos. Okay, let us see how we can solve this problem. Okay, now it is shown here. No, this is the formula. Okay, the unadjusted book balance to the adjusted book balance, and the unadjusted bank balance to the adjusted bank balance. Okay, let me see the correct answers. Okay, here is now the correct answer. Meco Trading Bank Reconciliation Statement, March 31, 2019. We start with the unadjusted book balance. So how much was the unadjusted? 17,458. This is given in the problem. Unadjusted bank balance is 20,648. So everything that follows here are the reconciling items. Okay, let's start from the book. There is a debit memo, an NSF, okay, that plus the bank fee, so 4,697.80. So this has already been recorded in the bank, okay, but not yet in the book. So we have to record it in the book balance, as in your book balance, as a deduction. Why deduction? Because this is an insufficient fund. Okay? Then the printing for checks. How much? 100. We also deduct it because that is a reduction in your cash balance. When you asked for check for what's this the the printing of the checks. Then a credit memo. Why is it a credit memo? Because the bank collected your notes receivable. he was able to collect 1,800 plus 180.50. So that I plus 180, which is the interest earned, minus the 50 pesos here is the what? Yes, the collection fee of the bank. So the bank, in your books, you will have to record the collection of 1/8 plus your interest of 180, deduct your 50 pesos collecting fee for the bank. Okay? So then there is an error in recording the check. Instead of, okay, it should be 1633, but it was recorded in the book as 1363. So there is an error of 270. So if you get the total or the sum of this, 17,458 less 4,667 less the printing charge plus the credit memo of collection of notes receivable plus the error, so it will give us 14,800.60. Now let's go to your bank balance. Your bank balance is 20,643.80. But take note, in the additional information, there was a deposit in transit. So deposit in transit was already recorded in the books but not yet recorded in the bank. So we have to add it. Okay, the deposit in transit should be added to your unadjusted bank balance, and then the outstanding checks. The outstanding checks of 1,450, 2,789, and 3,000 something, I can't read, 3,982.20. This should be deducted to your bank balance. Okay? Next, we get your adjusted bank balance of 14,800.60. So now it is adjusted, and the both the book balance and the both the book balance and the bank balance are equal. So this is our final answer. Okay? Now, okay, I'm giving you an assignment here. Okay, this is a bank reconciliation, preparation of bank reconciliation statement problem, and the name of the account is Justin Trading. Okay, the following data or additional information are given down here, and you can prepare with this information, you can prepare your bank reconciliation statement. Okay, so thank you very much. Thank you very much for watching, and I hope you were able to understand the topic and you can be able to prepare the bank reconciliation statement of Justin Trading. Again, I'm Teacher Jonah of ABM. God bless everyone. Thank you very much.